We're rounding the corner to the last month of the year, and we're going to ask Gary Glover what the outlook is to come into the year end and what he's trading at the moment, as well as where he's seeing the opportunities in the Australian market. With all that to cover, we say good morning, Gary from Novus Capital.
Hey, Chris, how you going?
I'm well. We're just outside of December. A lot of people are asking, is that Santa rally coming at the end of the year, the Christmas rally? And you've also been looking at the different shifts in the market where the opportunities are. So this is your normal Tuesday report. You've got it in front of us. What are you seeing right now when you're looking at the markets?
Funny, I think I've actually changed my mind since the weekend there, just because I've sort of because everyone's in agreement with what I'm seeing.
Yeah.
So if everyone thinks the same thing, that rarely happens. So everyone thinks we're going to get a little pullback here, a little consolidation under the high of some sort, a bit of a breather here. So that kind of worries me. There's obviously a few bears out there thinking might come back, but predominantly everyone's sort of seeing a healthy market, particularly more so probably in the US sort of stuff. A lot of stocks sort of developing there quite nicely, but everyone thinks we'll get a little pause here. I was just having a look at some of the US charts there, historical stuff there, just in the last day there. And sometimes when they come out of a little consolidation like this, a little flag like this, Chris, that they might only really consolidate under the high for a couple of days before they punch through it. And it might just be like because we've had a pretty fast move here, we might just punch through and then just, consolidate. Yeah, but more like a 45-degree sort of climb here. So it might be a little 1-2 day consolidation there, and then just a sort of grind higher. Then we just go through the high, but then just sort of, and that was what I sort of saw historically when I saw similar type of breakthroughs and patterns there. I thought, oh, okay, well, I would have expected to see that David Ryan sort of, maybe 2 or 3 weeks consolidating under the high and then you push through it. That'd be what you want to see. But oftentimes you can only get sometimes you only get 2 or 3 days consolidating and then it punches through. I thought, well, okay, then, so I kept looking at quite a few examples and I kept seeing that same setup. Oh, okay. So yeah, it's interesting here. I know sort of everyone's expecting a pause here, but I'm hopeful. I think the pause potentially might be smaller than we think. So we'll see how we go.
So that's definitely the NASDAQ and probably the S&P's in a similar boat. When you're scanning through these charts, what you're talking about, and you're talking about those 2 indices that you've been reviewing? Yeah,
I mean, they've all got a pretty impulsive move here, Chris. So it's pretty vertical, that move. It's not a sort of meandering type of move. So because even if you look at that low from May as well, particularly in the S&P there, you can see how quickly that was pretty deep pullback as well. So you wouldn't say that's overly strong. That's quite a deep pullback into the range. But then, bang, it's like within 3 or 4 weeks, it's gone back to retest the high again in really quick time. So oftentimes how fast you go back to retest that high is a sort of sign of the strength or weakness. And then it's like, so I know McLaren used to, he's saying the market's simple as counting, like the market, pulls back, say 4 days, and within 1 or 2 days it goes to that's a strong market. So he often looked at how many days or how many weeks down and how many weeks back up to go to the high here. So I mean that's we're 4 weeks up here, we're almost back to the high again. So although it was a bit of a deep pullback, it's finding it easy to move higher here at the market. So that's got to be taken as sort of positively here, really. So yeah.
Like Jesse Lindmore saying the line of least resistance.
Yeah, no, exactly right. So I mean, it doesn't feel great out there. There's probably lots of sort of still negative sort of headlines out there, but I mean, the market's moving higher sort of freely, particularly more so US than us. But yeah, it does look pretty bullish, the US market there from what I was saying there. I know a lot of professional US traders that I find there, they're all talking about lots of different setups there, lots of little coils and flags sort of on the stronger stocks sort of setting up here as well. So just interesting.
Well, that's to growth in the NASDAQ and the S&P 500. If we have a quick look at the Aussie, more of a value index, definitely a different currency. we're well and truly under that high. And yes, we have climbed in the last couple of weeks, but what you've been describing here, coming back, retesting those highs from sort of the July region, we're still a long way off that. So how do you read what we're doing?
Yeah, we're definitely underperforming, definitely showing a relative weakness versus the other indices there. So is this because maybe our interest rate cycle has been a bit slow here, and then maybe we got another, this I saw the interest rate guy saw the other day that I think 2 weeks ago there was like less than 5% chance of a rate hike in December. I think now markets are pricing in like a 25-30% chance of a hike in December. I don't think they'll go December personally for Christmas, but they could go in January after Christmas. And yeah, but depends on what the data sort of does here. And so far, because we've been a little slow to get rates high here, we haven't got inflation moving as fast as everyone else. But maybe that'll sort of kick in here soon here. But our market's underperforming here. I mean, probably one of the odd things I find, Chris, is that like you've seen BHP RIO which we sort of covered in the last month there, coming out of those sort of consolidation sort of flags and then breaking up really strong pattern there. If you look sort of at some of the other miners like S32, IGO, Alkane, it's just a host of them. They're all down near their lows. So I know Lithium's on the nose at the moment. Obviously, go through a little sector there, but some of the sort of just more broader miners are showing some weakness there. So it's fascinating that some of them are sort of powering new highs and others are in new lows. So yeah, it's a real sort of mixed sort of climate here at the moment.
That's a good point here. We talk about the diversity across the Australian market, the leaders, and this year that we're looking at here, while it is the top 200 companies, heavily weighted towards the BHP, Fortescue's, the banks, the top 20. That's where your trading opportunities are a bit later. So we'll look at that in the report, because what we see in the indices doesn't necessarily or always reflect the opportunities within the market. But before we get to those trading shares, kind of bridging the gap, you've talked about the NASDAQ, the S&P doing well and coming back towards those highs, more of a value indices, but in the US, this one has come back. The Dow has come back closer to the highs, definitely than the Aussie. Are you seeing that sort of falling in line with the NASDAQ and the S&P with what you were talking about, with possibly grinding higher?
Yeah, look, it has obviously bounced pretty aggressively. I mean, look, this is the only one that, obviously this one came back the deepest, so probably showed the most negative sort of price action. And then we do have a bit of a break zone there as well. So it sort of has come back to retest that, So if there's any sort of index or any weakness here, this is the one that's sort of shown it so far. And we're just going to watch that overhead trend line, because that's sort of, I think something like the XJO, we did break something like that, came back and retested it and went lower afterwards. So that's the only negative chart I can see, the only negative sort of line to watch for here. So it'll just be interesting to sort of see how the Dow tracks that line there. But that's the only negative thing I've seen so far on the, I mean, the NASDAQ is really strong here. S&P, pretty firm here. The Dow's been, obviously less here. That's a deeper pullback there into the range. Has broken below a bit of a swing high as well on the way up there. So that's a little bit more negative. So just see what happens at this range here. Maybe we'll just consolidate, or maybe we'll climb along that there. It probably sort of suits the NASDAQ sort of hitting a level there, maybe a little consolidation and then just a sort of slow climb here. So that might suit the Dow here. Maybe the Dow's going to track that trend line up here for up to Christmas night. So we'll see.
Well, we look into the Australian market, into some of the larger shares, and see what's going on. TWE, Treasury Wine Estate. This time we're looking at it from an acquirer perspective, because you were talking about the $1 billion acquisition of a Californian winemaker. So what do you expect is this what you'd expect to happen from an acquirer on the market? Or is there anything that's standing out as an opportunity in this situation?
Yeah, I mean, look, this is sort of pretty standard here, obviously, particularly you're making a big acquisition like this as well. So I think it's close to, it is close to $1 billion acquisition there. So obviously put share price in there, you're raising money at a lower price there, so it brings the share price back here. So just technically, there's a bit of an interesting level here just below that sort of 1050. It's had a few touches down there historically. This is an area where we typically sort of bounce from. So I've seen the past there when you sort of do these sort of raisings there, it brings the price down. And then, look, there's some risk with this one, Chris, because we know in the past that some of these larger acquisitions, foreign acquisitions, some of them have gone well, some of them haven't gone well. So, you think, wine's probably a bit more of a simpler business. But, as I say, it's just some history there of some Aussie firms, coming unstuck, trying to make these big sort of overseas acquisitions there. So I just know a few people were querying the price. Thought it was a fairly full price rather than a bargain price. So just basically puts pressure on the deal to get it right, So, but technically we just think it's a level to sort of keep an eye on here. I think if I see, some sort of bullish reversal here on the weekly, might be sort of worth watching that. But just got to wait for a bit more evidence here. I think it probably might come back and retest that sort of 2022 low, maybe come slightly lower down there. But if we get some reversal here, some stability here, but what we want to see is maybe it goes back up to $12 there. It's like maybe $12.20 once the stabilizes there, but it probably what might be sort of range bound there until we see a bit more evidence as to how that acquisition is going.
Right. Well, the next one on the list is Domain Holdings, DHG. If you've got ABC, so A, B, C, then seems to have still volatile, but stayed within this. The closer open close, it hasn't been as volatile as previously, so a bit of a less volatile period. What do you see happening here?
Yeah, there's a couple of things there. Just obviously kind of riding that 50-week moving average as well. Has come back in 3 waves there. Didn't sort of follow through there, Chris, as well. So I thought, that was really going to sort of sell off there. Probably would have sort of kept going sort of, through there. The other observation is that sort of C leg too, there wasn't a lot of selling volume through it as well, Chris. So that pullback was pretty light. So that whole last leg down there, just wasn't a lot of selling here. So I thought, okay, this is a bit of a key level. So sometimes these sort of stronger stocks there can have that little 3-way pullback, and then they can sort of go again, even though it's gone to a new high. I used to sort of be not like those little false break of the highs. They used to be quite bearish and stuff there, but sometimes they just have a little 3-way pullback and they can go again. So just interesting here to watch this one closely here, because this potentially could, if it can hold that sort of C wave in place, then it can go higher here. I'd actually like to sort of see it hold on the daily there. I think there's a lower high there around that. Might be like 346. Is kind of like it's had a couple of goes there. So I'd actually like to sort of see it hold there. So like, I'm not a big believer in the double bottoms and double tops and stuff there, because I think more of them fail here. But if we've got a low in place and we get a higher double bottom after a low, then that's more valid there. So just be nice to see if we can hold here. This sort of week here, not break above it, show a little bit of strength there. This could be one to follow.
Right, that's Domain. If we look at the retailers, so Adairs, we've had Black Friday, Cyber Monday, and who knows, maybe they'll have some positive news out of their volumes. But what's more important, I guess, is that you've got these green lines here showing that it's in this downward expanding formation. Really volatile, really fast drops that it's experienced. And then we've got FB in here. So false break, undercut this low, drops down, and then around lower, and then shot back over it with a bit of volume and a good solid candle. So putting all that together, what's your analysis of what's happening here?
Yeah, so you got your sort of descending wedge pattern, which it's obviously broken out of. Do have a false break of the low. So it's had its issues there. So the dividend got sort of withheld there, just obviously a bit of over sort of stocking there, like some of the retailers sort of had there. But I do like the fact that there's some sort of accumulation taking place down at the lows as well. So, and now we've sort of broken up there. What I was most impressed with was actually the trading update on Friday, Chris. The stock did sort of trade down intraday and then just came roaring back on the daily there. We had that sort of big sort of, basketball under the water, sort of, got pushed down and then the whole thing, the price popped there. So we saw a really sort of, any weakness there, the market basically brought that weakness up. And there was big volume in there as well. So I thought, that's a really good sign here. And I think the PE is single digit here. The yield's pretty, even though the dividend's been held here, normal type of yield here, the stock is pretty high at the moment here. So trading a really, really low multiple. But I think, potentially maybe the worst might be, might just be pricing in too much negativity here for Adairs. I think the update was probably a relief there. So I think this one might build here, might be slow moving here, but I think that's pretty good signs there. So I think it'll sort of climb here.
Well, if we move from retailers to NRW, so mining services, interestingly, you've got another two miners that you mentioned earlier, and look at those charts. As we're looking at, they continuously look at Entum, you see that 1 in 4 of the top 200 companies at the moment are mining-related companies. So this is a mining-related company from the mining services perspective. How are you interpreting what's going on here for NWH or NRW?
Yeah, you got a couple of things there. You got a little false break. So we obviously went to a new low there recently, and then sort of reversed there and held that sort of high in place. It's still sitting pretty high in the range here, so showing a bit of relative strength versus the overall market. That actual pullback there as well is probably sat on top of that little high there in sort of April, May as well. So just that little first leg off that, I think if you look at that March low there, it's just sort of sat on top of that previous little high there and just sort of sat on top of that. So market has sort of come back and sort of sat on top of that. So that's kind of constructive there. And I just like the fact too, that last pullback, I think the 5 or 6 weeks down, the volume was so light. So there was just no aggressive selling at all. And I know we're seeing a lot of this because the market's just meandering, like some light volumes there, but just not seeing a lot of aggressive selling here, which is probably typical of a range-bound market. Just kind of, it'll just drift off and come back down the bottom of the range and then reset again. So I think this looks sort of constructive here.
Okay, so another false break there, and we'll watch the volumes to see what happens. You did mention earlier BHP, Rio, Fortescue, they're performing well, iron ore exposure, but at the same time, there are a whole lot of other commodities that are represented on the ASX. South 32 has been that spin-off of a lot of diversified metals and minerals and mining. What on earth's happening here is not reflective of BHP, so clearly there's divergence.
No, exactly right. So some of the other miners are sort of kind of really sort of struggling there. I sort of was looking at this previously. I just sort of projected that first leg down to measure a sort of like a C leg, and it sort of hasn't sort of come all the way down. But that's a big correction, that first leg down. So it doesn't always A equals C all the time, because particularly if you get a really decent sort of size correction there. But that 61.8 is around that 305 zone. So that's a big sort of technical zone. It's already had one little bounce from there. So I just think it's a bit of a level to keep an eye on here with all the other sort of miners powering on here. Interesting, a couple of these are sort of a trading down the bottom of the range here. So, I think S32 is pretty interesting here. Just watching this one pretty closely. Still, all we're seeing is sort of lower highs here. So we don't want to sort of step in front of a downtrend here, but that's just a big level to sort of keep an eye on there. Nothing obvious in the volume there's been pretty consistent all the way through there. So we would have liked to have either seen some volume dry up on the selling, or seen some big volume start to step in where it hasn't been stepping in at all. But there's pretty mixed sort of story there. But just a bit of a level to keep an eye around 305. So but we do want to sort of see some sort of break this, break above an old high, so before we step in there. But definitely big level here for the stock here. So just one to watch closely here on in the next couple of weeks here.
Well, you mentioned before some other minerals, and you got lithium for PLS. So they've been on the nose, like you said. Lithium companies have been. This downward movement seems fairly consistent. We had a consistent rally earlier in the year that you've highlighted, 100 to 0. So that's giving you the range. Where we're pulling back, we've had A, B, C. A possibly not so equal to C, but close. But then we're having this pullback here. So you're saying, talking about staying in the range that you'd mentioned up here. Is this a critical point, the 61.8, 33, possibly a false break potential?
Yeah, it's a big level there. It's a big level for a couple of reasons there. Obviously, it's a big Fibonacci level. It is basically the old low as well. But in terms of actually sort of holding firm here, like in terms of the structure of the trend for the longer term, we don't want to be sort of saying, like near lows here or lower highs and stuff there. So I don't mind seeing these little three-way pullbacks and then we build from there. But if it breaks the C leg, then that for me that's actually, it means that's actually showing a real weakness there. So kind of like it's okay to come back and sort of retest sort of old levels and stuff there. So I just think it's a bit of a critical zone here, price zone. So if PLS is going to go rally back up and make a new high here, it must hold that C low. If it breaks the C leg low, then you probably, it can still bounce again, but the bounce might be probably as meaningful. It'll be more of a choppy bounce there. But, if we think lithium's still got another, this is still part of a larger cycle of heading higher there. We're seeing here before with SKU and BHP and RIO, they'll have decent pullbacks and big pullbacks there, but they won't keep breaking major lows. I just think that's a pretty significant sort of low for this stock here. So just important for the stock to hold that level, in my opinion there. So I think lithium prices have been levered down the last couple of nights, Chris, as well. So yeah, it's funny. I just looked at PLS here. Actually, it was down this morning here, but it's actually bounced there. So it's actually showing something here, considering the lithium price is showing very little. So that's not a bad sign here. So just definitely one to keep an eye on here really closely at the moment. It's just, again, a big level there for the stock here. So just seeing some of these sort of second tiers at sort of some key zones here. So just watching quite a few of those out at the moment. So like, IGO is another one that's come back pretty deep. AKE is another one that's come back. So just some of those are at some big levels there technically. And it's just a lot of them, those second tiers that are at kind of critical levels there. So yeah, interesting.
Well, mining companies, we know, make up a large portion of the Australian market. And if the banks aren't necessarily firing, they can be, and they can take our market higher. So it's worth investigating and worth watching. And that you've walked us through the trading shares, the opportunities to look for this week, and the indices where we may be seeing them go towards the year end. And we'll say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
Gary's mentioned some trading setups, false breaks, and that kind of thing. Springs, a whole series of videos there in a playlist where he's talked about that and more in-depth research, also like his blueprints for years gone past. Here on the right-hand side, there's also 30-30 list where we talk about the leading momentum companies and the launch pads. And then the left-hand side, if you wanted to follow Gary, his Twitter or his X handle is over there.